Okay, so remember that movie, How to Lose a Guy in 10 Days?
Yeah, yeah.
Like all the crazy stuff she does to
Yeah.
like mess things up?
Right.
Well, think of this deep dive as like the trading version of that.
Yeah.
How to lose a trade in like 10 days or less. But, instead of relationship drama, we're talking about real life trading horror stories.
Exactly. And hopefully help you, avoid making the same mistakes.
Yeah, those "oh no, what was I thinking"
Yeah.
moments.
Exactly.
They've all been there. But sometimes, hearing about other people's blunders can like really drive the point home.
Absolutely. It's like a cautionary tale, right? You can learn from it.
Totally. So like, let's jump right in. Two of the biggest ways people, they kind of self-sabotage their trades. Ignoring stop-loss orders and over-leveraging.
Big ones.
Yeah, for sure. So first up, stop losses. Can you like break it down for anyone who might not be familiar? What are they and why are they so important?
Sure. Think of it this way. You've got a stock, right? And you decide, okay, if it hits this price, I'm out. I don't want to hold it anymore. A stop loss order is like an automatic trigger. If the stock hits that price, it sells no matter what.
So you don't have to like constantly watch it and second guess yourself.
Exactly. Takes the emotion out of it, which can be tough.
Oh, tell me about it. Like, I once heard about this trader, right? He set a stop loss, but then the stock started tanking.
Yeah.
And instead of letting the stop loss do its thing, he's like, no, it'll bounce back. I just know it.
Classic. That's what we call confirmation bias, right? They get so attached to their initial idea that they ignore any signs that they might be wrong.
Yeah, like wearing blinders, only seeing what you want to see.
Exactly. And in his case, those blinders cost him like a ton of money. He was planning to use it for a down payment on a house. Gone. Just like that.
Ouch. That's a tough lesson to learn.
It is. That's why stop losses are so important. They like force you to stick to the plan. Even when you get that, that sinking feeling in your gut, it's about logic, not emotion.
Makes sense.
Hmm.
So are there like different types of stop loss orders?
Yeah, actually, there are market orders, which sell at the current market price, whatever that may be.
Okay.
And then there are limit orders where you set a specific price, like sell only if it hits this exact number.
Interesting. It's like levels of protection.
You could say that. Different tools for different situations.
Right. Speaking of risks and protection, let's talk about leverage. Another way people, let's just say they get in a bit over their heads.
Yeah, leverage can be a tricky one. Basically, it's borrowing money to increase the size of your position, like a multiplier on your potential gains.
Sounds great in theory.
It does. But here's the catch. It also multiplies your losses. So if a trade goes against you, you lose way more than your initial investment.
Right. The higher the reward, the higher the risk. Reminds me of the story I heard about this day trader. We'll call him Mark.
Okay.
So Mark gets this like hot cryptocurrency tip, thinks he's going to be rich overnight.
Happens all the time.
Right. So he goes all in, maxes out his leverage. And at first, it's like a dream come true. The price is skyrocketing. He's probably already picking out his yacht.
In there. Well, not the yacht part, but the feeling.
Oh, yeah. But then, of course, the market does what it does. It turns.
Unpredictable. That's the market for you.
And Mark's dream trade becomes a total nightmare. The price plummets. He tries to sell, but it's too late. And then, bam, margin call.
Meaning?
His broker's like, hey, you owe us more money to cover these losses.
Oof.
Yeah. But Mark, he doesn't have the funds. So poof.
Yeah.
Entire account liquidated. Yachts are out. Mountain of debt is in. All because of leverage.
It's a harsh reminder that leverage magnifies everything. You have to be prepared for the potential downside, like really prepared.
Which means?
Understanding your risk tolerance, knowing how much you can actually afford to lose, and then choosing a leverage level that aligns with that. Don't get greedy.
Solid advice. So, for everyone listening, let's take a moment here. Think back to your own trading experiences. Have you ever been tempted to ignore a stop loss? Or maybe felt that rush when a leveraged trade starts going your way?
It's a powerful feeling, but you got to keep your head on straight.
Exactly. Recognizing those feelings, understanding how they can influence your decisions, that's a huge part of becoming a better trader.
Couldn't agree more. Trading psychology is as important as the technical stuff. Knowing yourself, your strengths, your weaknesses, that's key.
It all comes back to risk management, doesn't it?
It really does. Having a plan, understanding the markets, and never ever risking more than you can afford to lose, those are the golden rules.
Golden rules indeed. So, yeah, we've had some laughs today, maybe some cringes too. But the bottom line is this. Trading mistakes, they happen, but they can be avoided. Learn from these stories, develop a solid risk management strategy, and your chances of success go way up.
Don't underestimate the power of the market. It's a force to be reckoned with. Approach it with respect, caution, and a healthy dose of realism. Don't let your emotions get the best of you.
Great advice. Well, on that note, that's a wrap for this deep dive. Hopefully it's given you something to think about, maybe even inspired you to reevaluate your own trading habits.
Yeah.
Because sometimes the best lessons come from, well, let's just say learning from the mistakes of others.
Exactly. Learn from those who've been there, done that.
And hopefully avoided a few financial disasters along the way.
Right.
Thanks for joining us.
Thanks for having me.
We'll catch you next time.